So earlier we talked about the fact that we do financial due diligence as part of our service offering. So Brittany, I want to kind of pitch that over to you and get a little bit more information from you. If you could explain to our viewers kind of some of the high level areas of what we look at when we're doing financial due diligence to make sure that they are safe in acquiring this business and that there aren't any landmines.
Sure. It is really important because if the financials aren't solid, you could really be getting yourself in a difficult position. So some of the big areas we look at are around your working capital, around your inventory. If you happen to be, say, a manufacturing company or a construction company, we'll also be looking at things like work in progress, seeing where that's at. Looking at your assets, seeing do you have what the balance sheet says you have? What does your cash look like? And then looking at different things like the trends and analytics as far as how is the business trending. And David alluded to it in one of our other conversations as far as benchmarking. How are they doing in the industry? And overall, are they trending positively or negatively? So those are some areas I think mainly it's just really important. If you've never worked in as an accountant or in the financial arena, it's really important to have that safe, trusted pair of hands to check those numbers for you and be looking at those things. Because again, if your financials aren't good, you could be setting yourself up for a really difficult time being successful in the business and acquisition.
Yeah. What are maybe one or two things that we've come across in the last several months or year that we've been doing this together that stand out to you as like things that we maybe either saved a client from a dangerous situation or were able to make a correction to something would have been problematic for them? Can you think of a couple of things that you've come across?
Sure. Yeah, we actually did. We did have a seller, or excuse me, a buyer that came to us looking at a deal that, the initial numbers, they thought they looked pretty good. The seller had a few things that they just wanted the buyer to trust them on. We did dive a little bit deeper, and it turned out the cash flow wasn't quite what they thought it was. So it would have made it really difficult for them to be able to service the debt and also be able to take some pay and, also maintain working capital and keeping the business operating. So after we did some modeling for them, it turned out that it wasn't a good deal and they decided to back away from the deal. So that was, on the saving you from potential mistakes side of things. On the other side of things, we've had some great deals where we're looking at it and the valuation, say for example, on the real estate or on the business actually came back a lot better. So they were able to get some better terms on their loan products and things like that because there was more, built-in equity they were getting above and beyond what they offered. So,
and I'd imagine even with dealing with the lenders, with the buyers you're working with and whoever's going to be lending them money for debt or equity, does the financial due diligence also help organize quite a few things that can be readily accessible to give to the lender and speed up that process as well?
it does. And I think David, it would be a really great one to speak a little bit more about that.
Yeah, we're thank you, Brittany. We're really asking for a lot of the same things in financial due diligence and across all of the due diligence spectrum, really. There's almost a complete duplication of what we're asking for and what the lenders are going to ask for. So we already have all of that stock of information. And a lot of times we've already done the analysis of that information, and we can provide the lender for their underwriting process, not only the details, but our analysis of those documents, and it really helps them move through the process faster. And in some cases, we've been even able to kind of contradict some assumptions that their analysts have made that we felt were incorrect, and we've been able to point them to where in the data the assumptions were flawed or were doubtful, and we've been able to help our clients get their financing across the finish line.
So I guess we want to end this video with a quote from David Geralt. You said, if you think it's expensive to hire professionals, try hiring an amateur.
Yeah,
right.
exactly.
And this isn't even really expensive, to be clear, but the idea of there's so much expertise that goes into doing financial due diligence and all the different types of due diligence that you're doing. And I don't know, after seeing a page of videos like this, how could you ever feel comfortable trying to do it on your own ever again? How could you ever feel comfortable hiring somebody who doesn't know what they're doing or taking that gamble? Mm-hmm. So I think more than anything on these videos we're going over today together is just how much really goes into it. No one actually really knows until they've gone through the process and gone through this process probably a couple dozen times to actually face all of the challenges that you could face that's going to take a lot of deals to get through it. So I think your wisdom and your knowledge is very much appreciated. And with that, we'll see you in the next video.